Hey guys, so I had a conversation yesterday with someone who was trying to understand why it matters to sort of compare one asset class or one index or one stock versus another. And so what I decided to do is give a practical example of how it would affect one's portfolio and being in the wrong things that are no longer going up or higher versus being in the right things that are still going higher. So what I did here is I took two things. I took again, like I did earlier this week, the equally weighted NASDAQ 100, that's the QQEW, it's in blue. And I took the XLE, which is energy, which is the orange line. And then through sort of a multi-year lens, you can see, we've had a pretty positive correlation, certainly off the lows in 2020. But if we zoom in a bit closer, you can see that the NASDAQ 100 basically stopped going higher, topped out in November, while energy really just had a pause that refreshed. And just to give you some statistics around this, I just ran some numbers. If one would have remained long or allocated long to something that is bullish trend, energy, the orange line, that thing is up 25-ish% since December. It's kind of sort of like I'm taking like an average December number, right? So up 25%. The NASDAQ 100, equally weighted, is down currently about 12-13%, was down closer to like 18% at some point a couple of weeks ago. So if you take the 25% up that XLE was, or energy, which is bullish trend, again, respect the trend, versus something that's no longer going higher and is actually no longer in a bullish trend at all. I'll show you guys in the market rover, which is the NASDAQ 100, which is down 12-13%. 25 plus 12, 13, you're somewhere within 35 to 40% of performance difference, which is literally life-changing for one's portfolio, whether you're an individual, you have a retirement account, or just a trading account, or you're a fund manager. And so, again, I just want to bring out the importance of respecting the trend and also respecting and having a process and a tool that tells you when things are no longer going up and getting out of those. So again, look at the NASDAQ 100. The NASDAQ 100, we had the market rover initiating a bullish trend, that's the green background, in April of 2020. It then stopped being bullish trend very quickly in early mid-January. So you didn't give up a whole lot of upside. Whereas if you look at the XLE, the energy sector, and I'm just going to give you again the energy sector ETF as opposed to an individual stock, you can see it went bullish trend, again the green background, in February of last year, so about a year ago, and it remains uninterruptedly bullish trend, again the green background. So again, these are really, really important things to understand when it comes to respecting the trend, because there's so many people I still talked to, and I mentioned this earlier this week, that still are just looking for their favorite tech stocks to buy. And again, there will be a time to buy those again, but the trends are no longer there. They're in consolidation phases at best. A lot of NASDAQ 100 stocks are down 50-60%. The average NASDAQ 100 stock is down about 20%. So versus the average energy stock is just bullish. So again, we need to have a process that allows us to be long the things that are bullish trend, like the orange line, meaning energy, and no longer being bullish trend, or maybe even short if you want to be aggressive, things like tech for the time being. Hope it helps. See you again soon.